Hi, I'm Zach Pandl from the research team at Grayscale Investments, and I'm here to talk to you about Bitcoin and the U.S. presidential election. Crypto investors are sure to focus on the candidates' statements about Bitcoin, as well as for any clues on legislation for our industry that may be coming under the next Congress. But in our view, the most important issue in November will be the macro policy topics on the ballot. Bitcoin is a macro asset. It's an alternative money system and store of value that competes with the US dollar. As a result, government policies that affect the outlook for the dollar could also have implications for Bitcoin. One example of these policies is the degree of government deficit spending. When the US government runs a deficit, it borrows in order to fund spending. And a significant amount of that borrowing comes from overseas investors who purchase US Treasury bonds. In fact, for the nation as a whole, we run a large international debt position. America's foreign liabilities are much larger than our foreign assets, and this now totals 65% of US GDP. If we keep spending more than we earn, at some point, foreign investors might lose appetite for lending money to the United States, and this could result in dollar depreciation. In their first terms as president, both Trump and Biden oversaw periods of rising deficits and debt despite a low unemployment rate. As a result, we will be less focused on which party controls the White House, and more focused on whether there is unified or divided government. Unified government just means that the same party controls both the White House and Congress, and in that situation, it should be easier to pass deficit-expanding legislation. We will also be very focused on the outlook for inflation. In a survey conducted by Harris Poll on behalf of Grayscale, we found that inflation was the #1 issue on the minds of likely voters for November. Bitcoin can be considered a hedge against dollar debasement, meaning an erosion of purchasing power through depreciation or through inflation. How might we get structurally higher inflation in the United States? One way might be through weaker Federal Reserve independence, meaning independence from the day-to-day considerations of elected officials. Research finds that independent central banks are more able to deliver low and stable inflation over time. We will therefore be watching any candidate statements about the Fed, as well as any clues for who they might appoint for Federal Reserve Chair once Jay Powell's term expires in 2026. Lastly, we will be focused on the U.S. role in the world. Outside the United States, many of the holders of dollars are governments, and the dollar typically makes up the largest share of foreign exchange reserves among most countries. Because governments are involved, this means that both economics and political factors can be important for driving dollar demand. If the United States plays a less dominant role internationally, there may be less demand for dollars and more demand for alternatives like Bitcoin, physical gold, or other foreign currencies. Bitcoin has a lot going for it at the moment. Inflows into spot Bitcoin ETFs, the halving event coming up this April, and the prospects for Fed rate cuts later this year. But the November elections will be another important event for Bitcoin. Bitcoin is a store of value, and in that role, it competes with the US dollar. As a result, US government policies that worsen the medium-term outlook for the dollar could be positive for Bitcoin. If the government wants to curb demand for Bitcoin, the best approach would be to follow a strict macro diet of balanced budget deficits, low and stable inflation, and free movement of capital. At the moment, however, neither major political party in the US appears to be embracing these principles, and that's one reason why we think there's so much investor interest in Bitcoin at the moment. For more information, please visit grayscale.com/research. Thanks for listening.